you might get slightly better, providing you patience. And then there's some form of trigger at the 4135. You may get a rest and a wind up when you do 4200 because of the legacy neckline and the target of the W that I've drawn. But you should stay the whole race, because there's a 4-4 waiting for you. So with gold doing that, that's going to be extra good news for our friend silver to smash 49 and get you to the neckline, which was, wait for it, $50. Key number. Great to have a 5 in front for every ounce. You know, that makes this sucker $5,000 in a sense. I mean, and we'll be seeing a lot more than that on macros. We've told you $333, don't forget. There's going to be real excitement on silver. Gold's the one that's made an all-time high, not silver yet. But now we're probably, if we assume that this breaks, a big assumption, but it's probably heading in that direction. If this breaks and goes to the downside, the best part of the performance will be coming on silver and platinum, whilst gold will still be doing very well.
Gold's technical structure continues to strengthen, showing all the hallmarks of a sustained bull phase rather than a short-term rally. The market has built an impressive foundation, with a defined neckline around $4,135 and a projected target zone near $4,400. Recent pullbacks are forming healthy consolidations, rounded, calmer structures that indicate strength, not weakness. As volatility subsides, the setup resembles an inverted head and shoulders pattern, combined with a W bottom formation, both of which signal renewed upside potential. With every test of key resistance levels now turning into support, the chart suggests momentum is aligning for another breakout leg. Francishunt, widely known as the market sniper, emphasizes the importance of patience and disciplined positioning during these moments. His proprietary HVF, Hunt Volatility Funnel method, focuses on pattern recognition and early trend identification, capturing the fastest part of major moves. The message is clear: the trend is bullish. The setups are validated, and $4,400 remains a logical next milestone for gold's upward trajectory. Now, we present the clips from Francishunt's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
And we saw that there was a little bit of a test to the upside. We said this could break up, because previously we're saying, you know, you usually get 3 waves of selling. So let's just cover where we were at. We called it double top eventually. That triggered once we started getting that sell leg off. So you have what's kind of an M head, just the recent history. So this is the corrective part. That's a neckline, that light blue line. Then we ran into this inverted HVF structure that gave a target to the downside. I've drawn it a couple of times. If guys want to see the specifics of it, it gave you an exit over there, which is a downside move. So you'd had 1 big sell move, 2 big sell moves. There was a possibility, and typically we never short in a macro bull, but there was a possibility this could have gone either down or up. You could have had a third wave selling. The way you negate that is you break to the upside. And that's exactly what the market did. In fact, on Friday, it did this candle here. I'm not sure if everyone can see it, but it went up first and then got beaten back. It looked like a failed breakout. And then it sat back down on the 4,000, very key level. You'll see the blue line, 4 hours. We're looking at the gold price on a 4-hour time frame. And we're highlighting what I think is coming next. In our community update, which I did last night, I said, for those that weren't long, they're going to be given an opportunity. I'd already drawn this blue line on, and it's beautiful how it's done exactly what we expected. When we updated, we were here. And I said, don't whale in with leverage now. We have what is effectively a right, my apologies, that's the left shoulder. Ladies right, I'll get in trouble for that one. And then we have a head here as the larger bottoming. And I said to them, we're limit orders in and around the 4,050 to 4,100 box range. I think we're going to get a right shoulder pullback from this neckline that we've chosen, which is at 4,135. 4135. So we warned, nice strong move. We were lucky, some of us, to have got into that. There was actually the upside HVF in there that gave a target. I'll draw it in a second. But this is exciting stuff because gold is king. And if he gets up from his chair and moves, we saw the reciprocal move with silver and platinum starting to get a bid again. So let's just draw on a lower time frame what's happening and drop again by half. That's a two hour that I'm now on. So when we saw the structure that's actually going to be upside, because it really was a 50-50 call as to, you know, which direction will he go. We drew it here. That was it. And we said, look, if it targets that, it doesn't need to put much more on. Typically our targets are run through. So the purple line is our target, by the way, that was generated. That was the clear break in the end that ran. That's where stop losses would be placed. That's where entries would be placed. You could, if you're aggressive, get in a little earlier with your stop on that low 3 there. But that target was met, and we said, look how close it is to a round number 4135 that beautifully encapsulated the resistance levels. Again, they should be just run on the way down when you are setting up this structure. And what you end up is with that inverted HVF turns into a left shoulder. The other, when we really chop up, because we really chop up charts, it's what we do. We love it. We love technical analysis. We have the unique HVF method that is very powerful to do it, and we get a lot of pattern analysis out of it. Inside of this, there also was what we call the soft W bottom. So you'll see there's a blue line there. This is your high momentum, call it your left glute, spiky left glute, and this is your more smoothed out, rounded, not as deep, and lower volatility. It's exactly what you want to see when you are seeing recovery. First, you're coming down hard and fast, and the market is spiky. It was quite evidenced in the inverted HVF. These have sharp moves. They are brittle, they're pumps and then dumps, they're harsh. And you go into that left side of your W bottom. So that also was giving a reversal that's given this key neckline of the double top that I started the explanation technically showing you. So when this W goes up, it will probably have a little bit of a pause rest after running the 4-2, which was support also turned resistance. So it's amazing how when you do pattern analysis, how everything reaffirms key levels of significance. This is folded here. I said to the guys, put your limit orders in at the 4,100. We gave a range. A little bit below 100, down at 4075, up to 110, 120. Some of those, depending where they put them, I give them what I call a limit buying box. Some of those, depending if they were on the high side or the low side, will now have been filled. We don't expect the shoulder. So this is what you learn from the one half. So here's the half. I'm going to divide the price behavior in half. This was high volatility, mainly downside. Yep. Down, down, down. This is the slowing of the volatility, more rounded bottoms, and more steady climbing side. So the expectation here, and I'll use another color just to do it, is that whilst you've had a let go of that 4135, that was a little bit abrupt, that broadly you're going to do something more chilled, less deep, and more rounded as a right shoulder. And that typically comes like that. It should not be violent and volatile, because then we have problems. More loopy like that, convexity and concavity. So that's what we're looking at. So you will emulate the more calmer side of the W, where the W is your halfway mark. What does this all mean? Well, it means buy limits in this range and a tiny bit lower may well get filled, and that you have a target on that of around 4,400. So we guess our neckline, and we haven't needed to change it. It was a good guess. It's a key round number that was run 3 times. And you can see there was an attempt at support when this wick shows you here. So it showed us was a key level, and what's happened? It's run that level. And now it's having a pullback. So it looks to me like it's complying to an inverted head and shoulders. I've drawn the 2 shoulders, one still in formation, which we expect to be more relaxed, less spiky. And also the W bottom triggered. You'll note that the movement, if we go back to how it moves, the W bottom had that blue line there. So let's again just draw that. So you've got 2 reversal. They are embedded within each other. So it's kind of interesting like that. So there it is. You will note that the movement was very strong from when our HVF method setup broke. See how the HVF gets you in before the break and gets you the fastest part of the move. That's where you're nearly vertical. And then from there, you're going more at 45 degrees up. So you can see the inflection point of that W bottom neckline. And when you get to the major neckline, the 4135, you can see the resistance and the pullback coming into play. So it looks very much like, we can be wrong, by the way. And how do we get wrong? I start to get precariously concerned if we were to come past and down to the lows of the previous shoulder, because this was a volatile, fast dipping, fast back up shoulder. This should continue to show that there's reduced volatility. There's not so much leverage that needs clearing out and late dip buyers and frenetic. Gold has gone off now that it's not making highs every day. It's gone a little bit off the news wires, and that's exactly what the price behavior is reflecting. So you should be back at 4.4 if this pattern performs on balance of probabilities, providing we continue to see this. This is not a bad entry point. You might get slightly better, providing you patience. And then there's some form of trigger at the 4135. You may get a rest and a wind up when you do 4200. Because of the legacy neckline and the target of the W that I've drawn. But you should stay the whole race, because there's a 4.4 waiting for you.
Silver continues to mirror gold's technical structure, but with even greater volatility and potential upside. After completing its head and shoulders pattern and fulfilling the downside target, the metal has begun to stabilize at its neckline near $49, an area of repeated rejection and accumulation. This level now acts as a critical pivot point, with $50 marking the psychological barrier that could unleash the next significant advance. Each rejection at $49 has built pressure, creating a coiled setup that may soon break decisively higher. Structurally, silver's pullback has been deeper than gold's, positioning it for a stronger relative performance once the trend resumes. The gold-silver ratio is gradually unwinding lower, signaling a return to leadership for silver. If key support around 72 gives way, additional strength could emerge as capital rotates from paper assets into tangible stores of value. This shift reflects a deeper breakdown in financial trust, a macro backdrop where physical metals remain the ultimate hedge. Let's get back to the interview.
Silver, again, itself has pulled all the way back similarly, and it has come and met and had a pullback with gold. It's beautiful how, while gold was meeting an interesting level that we had chosen, which was the equivalent of these highs here, which is the right shoulder, silver has already come back and met its reversal pattern. It had a head and shoulder, not a double top like the M top that you saw there. This was a head and shoulder. That was the target. You can see it made that target to the downside. Done and dusted, contract done. No further downside. You're back at the neckline here. So it was quite typical. This is what gave us confidence. Don't go in now with leverage if you hadn't got in over here. Don't go and do it now, because you're probably going to get a pullback. What have you got? You've got your largest downside candle since this move up began. So again, a little bit of basing around here, and then further potential upside. There is a slightly sketchy inverted head and shoulder for this one. It's very interesting in that it's almost married up to previous price behaviors, blue lines. But if I were to draw, I put that 49 in there as a key level of significance. And isn't it interesting that it's almost the perfect neckline? If I were drawing the neckline now, I might have made it a tiny bit higher going through all of those to there. But 49 is very, very much a key level. So after you were selling off here, the 49 just run rejected, the 49 just run rejected, a weak final attempt to get it failed. And then when you came back up, 49 just run rejected, 49 just run rejected. And then this winding up squeezing process to smash 49 and get you to the neckline, which was, wait for it, $50. Key number. Great to have a 5 in front for every ounce. You know, that makes this sucker $5,000 in a sense. I mean, and we'll be seeing a lot more than that on macros. We've told you $333, don't forget. There's going to be real excitement on silver. So in terms of its down leg, silver is almost pulled back more so than gold. So whilst gold may make a marginally higher high, you could be in a situation where silver will be doing a little bit more than that and overextend, depending how much it gets its roller skates on. That's going to depend on whether we're unwinding the gold-silver ratio to the downside. So we owe ourselves to have a look at that one, XAU, XAG, and put that in there. You can see this one is coming again to the downside. We had a little push almost to go higher at one point. This is a weekly view, yes. So I was mainly highlighting the entrapment area we've been in since 2021, really.
Yeah, that's what I meant. I mean, meaning it goes back multiple years.
Yes, that's right. Yeah, so we got multiple years in that. And we actually warned if we had a shock and awe event that it could even go up. That hasn't really happened apart from that period there, and it didn't follow through on. So silver's getting some of the respect, but we haven't truly left the stall box that we're kind of in. There's a sort of 70 to 94 box here. Yes, you had a fake break out to the downside here, and you had a kind of a fake break there. We are heading to the downside. We'll have to see if we can follow on. This is an important one to watch. If we can let go of the 72, the 74 and 72, run this low, I think this is around 72, with the next key level is 65. And that would be, I would say, then you want to be primarily buying silver at that point. I would even be doing that now. So I've loaded up on silver and platinum over gold, where I've normally been saying to a lot of people, you shouldn't jump to the next stage too soon. So we've been stacking gold for a lot longer, and gold has been the overperformer if you look over the last years. Gold's the one that's made an all-time high, not silver yet. But now we're probably, if we assume that this breaks, a big assumption, but it's probably heading in that direction. If this breaks and goes to the downside, the best part of the performance will be coming on silver and platinum, whilst gold will still be doing very well. Gold is the winner. Gold is the winner as the unit of account, and very few things, we mentioned a couple here today, will be outperforming gold, and that will be real alpha. But if you don't know, just having gold is going to keep you in a preservational level state where everyone else is on the convexity bankruptcy curve. This is a crisis in trust. The French called for their gold because they saw what America was doing in Vietnam. They were in Vietnam before America. So when they saw how much bombing and how much nuking and how much Agent Orange and how much everything and flying planes and sorties over a war, you go to the other side of the planet. Think of the oil cost alone of aircraft carriers, troops, food, everything, logistics. You don't do war on the cheap. There is just no way. And they were doing it on such an astronomical scale. The munitions that were dropped in the jungle exceeded all of World War II in a single war between two nations. The only reason Europe didn't understand this is because most of the population was insulated from it. It was just some battle far away in a far off land, We are far more traveled nowadays. We've got to remember most people hadn't left their hometown in that area, and only a few people were worldwide travelers. That was an unseen, huge endeavor, huge, that spanned 3 presidencies, JFK, LBJ, and Nixon. That was a huge endeavor. And the French said, there's no way you're backed still. You've just created so many dollars for this endeavor. There's no way you're still backed. It was a crisis of trust. And tell me where we are now today. How's trust in fiat and debt right now today? It's a crisis of trust. And when you have a crisis of trust, there's only one thing that's still there. Every day, this is still 100 ounces and it's still 4 nines. Doesn't matter what happened. Doesn't pay me any interest, but it still weighs the same. It still looks the same. It still shines the same. And the only thing is, in the paper terms, it's going to keep going up. Throw their monkey money back at them. Get yourself physical. That's the key message. It's a crisis of trust. It's a debt-based collapse. Anybody who says gold or precious metals is a bubble is delusional. The real bubble is the system that they have in a controlled demolition manner set up and destroyed. That's the message. It doesn't get any simpler.
The cycle is clear. Trust is breaking down across the financial system, and tangible assets are quietly reclaiming their dominance. While most investors still chase paper promises, those who hold physical metal understand the more profound shift underway. Every crisis in history has followed this path. Debt expands, confidence erodes, and the world returns to a sound monetary system. Silver and gold are not just trades, they are lifeboats in a storm that's already begun. As currencies lose credibility, these metals will transition from undervalued relics to the foundation of wealth preservation. What lies ahead is not a trend, it's a reset of value itself. The winners will be those who saw through the illusion early and prepared before the crowd arrived. Real wealth doesn't need headlines, it requires conviction and patience. Stay grounded, stay informed, and hold what's real. Share your thoughts on his analysis in the comment section below. If you find this video informative, please support and turn on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.